Okay, let's dive in. Welcome everyone to the deep dive. We've got a stack of sources right here, basically a collection of articles all published around June 5th, 2025. They give us, well, quite a few different perspectives on the crypto market. Our goal today, pretty simple. Cut through all that noise you find in these sources and just pull out the most important bits, those nuggets of knowledge and insight, just for you.
Exactly. Think of us as your guides through this particular set of articles. We're here to help you understand what really stands out, why it matters, and we're drawing only from the information that's actually in these sources we have in front of us.
Yeah, stick to the sources. And this stack, it covers quite a bit of ground. We're seeing reports on like big moves from major financial institutions, and then there are analysts digging into market history, trying to figure out where we might be headed. Plus specific price action for key assets like Bitcoin, and then some really surprising reports about XRP. Almost head-scratching, actually. They seem to tell two completely different stories at the same time.
That's right. So based on these specific sources, we'll be looking at some big news around JP Morgan and our crypto ETFs. We're also going to analyze some different takes on the current market cycle, comparing it to past patterns like 2014 through 2017. We'll get into the details mentioned about Bitcoin's recent price levels, maybe some targets in the articles, and then, yeah, try to make sense of those fascinating, almost contradictory XRP reports you mentioned, one about a big potential treasury plan, and another talking about massive liquidations recently.
It's definitely a rich mix of signals. So, yeah, let's dive into what these sources are actually telling us and see what kind of picture emerges when we, put them all together. Okay, first up, one source highlights something that feels pretty significant. It's about the ongoing story of, traditional finance meeting crypto. JP Morgan is embracing crypto ETFs as collateral. That phrase itself, as collateral, feels weighty, doesn't it?
Mm-hmm. It does. And what this source points to as particularly noteworthy is seeing a major bank like JP Morgan actually integrating these crypto-related products, the ETFs specifically, right into their collateral framework. So this isn't just, trading them or offering them. It's about using them as security for loans, maybe other financial activities. The source frames this as a key market musing. It suggests analysts see it as a pretty meaningful step
Right.
in how these large institutions are starting to interact with crypto, kind of beyond just simple investment products. It could potentially open up, new avenues for liquidity, maybe broader acceptance.
Exactly. Using them as collateral, that's a deeper level of integration, isn't it, than just offering access? It sort of implies a certain level of trust, maybe regulatory comfort that the bank is finding with these instruments, at least based on the source's reporting.
Precisely. It's definitely a signal about potentially increasing linkages between TradFi and crypto.
Okay, now let's shift gears a bit. How are analysts in these sources looking at the overall market timing? One article makes this really compelling and honestly slightly concerning comparison. It states that the crypto cycle of 2024 eerily mirrors the 2014 to 2017 pattern, not the more recent 2021 cycle. And it even includes this pretty stark warning: brace for a rude awakening. Oof.
Yeah, that definitely gets your attention. And it raises a critical point that comes up in the sources. Which historical model are we actually following right now? Comparing the current pattern to 2014, 2017, like this source does, it suggests maybe a longer, more complex, possibly less explosive path than a lot of people might be expecting, especially if they're only thinking about that fast run-up we saw in 2021.
Right. And then complicating things further, another source adds a different layer to this cycle discussion. While it does reference the type of bull run seen back in 2017, describing it as following a, quote, textbook pattern relentless upward momentum peppered with short-lived corrections. It then suggests that for this current cycle, the signs point to a delayed but explosive finale. So maybe later than expected.
Exactly. So you've got sources looking at the past, but they're seeing slightly different things or maybe drawing different conclusions from it. One sees the overall pattern of 1417 and warns caution. Another sees the nature of the 2017 bull run itself, but predicts a peak much later than some might think. It suggests maybe a waiting period before that potential explosive finale. It just shows, doesn't it? Analysts are using different historical lenses, and those lenses suggest potentially different timelines or outcomes just based on these articles.
It really highlights the complexity. Trying to time or predict market tops just based on past performance. Well, it's tricky. You have different sources pointing to different historical parallels right here. Okay, so moving from the big picture cycle to a specific asset. Let's look at what one source reports about Bitcoin's recent price action. It notes that BTC holds 105K, while the 50 MA support faces pressure near the triangle tip. Okay, that's a bit technical.
Yeah, let's break that down. This source really zeroes in on specific technical indicators. It highlights Bitcoin trading right near a pattern known as a triangle apex, around that $105,000 level you mentioned. It also talks about the 50-day moving average. That's basically the average price over the last 50 days. Traders often watch it as a key support or resistance level, and this source says that average is providing support just below where Bitcoin's currently trading, but that support is under pressure as the price kind of consolidates, squeezes into that triangle shape.
Got it. So the picture is price squeezing into a point with this key average price support just underneath, and it's being tested. And what's the potential outcome? What does the source say might happen if that pattern resolves?
Well, according to this particular source, a confirmed breakout from this triangle pattern, so like a decisive move above those converging lines of the triangle, that may lead Bitcoin to reach $110,000. So it gives a pretty clear near-term technical target based on the specific chart setup they're describing.
Okay. That provides some concrete levels to watch for based on that analysis anyway.
Yeah.
Now, here's where this collection of sources gets, well, truly fascinating. And yeah, like I said, a bit head-scratching when you look at reports about XRP. They came out around the same time. One source comes out reporting that XRP is, quote, primed to move higher because a Chinese company, specifically China-based Weavis International, or WTO, is planning a major $300 million XRP treasury plan.
Yeah, this source gives quite specific details. It mentions WTO submitting a Form 6K with the U.S. SEC. And in that form, they explicitly state they're setting the stage for a potential corporate treasury based on XRP holdings. Now, as the source suggests, this implies, a potentially significant chunk of institutional-like demand coming into the market for XRP if these plans actually materialize. It definitely sounds like a very bullish fundamental catalyst, based purely on that report.
Okay, right. So you hear that, and it paints a positive picture for potential future price movement based on that source. But another source, published almost concurrently, reports massive liquidations on XRP. It describes how a small dip triggered chaos, highlighting a sharp price drop that caused this wave of forced selling for traders who are betting on the price going up.
Mm-hmm. And the second source gives a stark contrast, doesn't it? It highlights the immediate, sometimes brutal reality of market volatility. Liquidations, just to clarify, happen when traders are using leverage, basically borrowing funds to make bigger bets. And if the price moves against them past a certain point, the exchange automatically closes their position to limit losses. That's a liquidation. Being long means you're betting the price will go up. So a massive liquidation of long positions means a whole lot of people betting on XRP going higher were suddenly forced to sell when it dipped. And that often cascades, right? It pushes the price down even further, creating that chaos the source describes.
Wow. It's just remarkable to see those two stories side by side. A major potential corporate buy-side plan in one source, and then a report of an immediate painful price crash and forced selling in another, hitting almost simultaneously. It really drives home how many different signals, sometimes completely contradictory ones, are just flying around in the crypto market at any given moment, just based on these few sources alone.
Absolutely. It really underscores that you can have these longer-term, potentially bullish fundamental developments like reported corporate adoption plans coexisting right alongside the immediate and often, violent effects of market structure, leverage, and just trading dynamics. That's what's highlighted in that liquidation report. Both are realities of the market, and both are presented here in these sources.
Yeah. So looking back at this collection of sources we've just deep dived into today, we started with that signal of increasing potential institutional links, right? From JP Morgan using crypto ETFs as collateral. Then we explored the differing analyses of the current crypto cycle, comparing it to patterns like 2014, 2017, and also that 2017 bull run dynamic. We examined the specific technical levels and targets mentioned for Bitcoin from one particular source. And then we grappled with those two, well, seemingly opposite stories for XRP presented in different articles, that large proposed treasury plan versus a report of recent volatility and liquidations.
This set of sources truly taints a complex picture, doesn't it, of the market right now. It shows forces ranging from, potential deeper traditional finance integration all the way to analysts' warning based on past cycles. And then, the ever-present reality of volatility and leverage, which that XRP contrast really highlighted.
It definitely leaves you with a lot to consider when you look at the market. So here's a thought, just based only on the source material we discussed today. Given this juxtaposition of news, like JP Morgan embracing crypto ETFs as collateral, which might suggest increasing institutional integration, maybe market maturity, and then that analysis comparing the current cycle to the unpredictable 2014-2017 pattern warning of a potential rude awakening. How do you, the listener, start to reconcile these seemingly different signals from the sources about where the market might be heading, or even just its fundamental nature right now? It's definitely a puzzle presented by these articles.
Indeed. It really highlights that the market isn't often following just one simple script, is it?
Well, thanks for joining us for this deep dive into today's source material.